Hello traders, Doc here. This video will be very important for your trading career. It is very important to stick with this video, especially at the beginning, where I will explain how Forex market works, but not on a way that you already know. After that, I will explain some of my previous trades that I took in a VIP group last week and tell you exactly why I took those trades. So now let's move to a very important part and answer what is a Forex market. Well, first of all, Forex market is a market. And what we have in a market? We have somebody who has a certain product. Okay, this is a guy and he has an apple. And he says price is $5 for this apple. And we have a guy or a girl that wants to buy this apple. So what happens now? This guy says, okay, $5 is a perfect price, I will pay it. This guy says, okay, that is the price that I already have, so I will sell it for $5. And they are both happy. Now, what happens if there is another guy here? And he says, okay, but I want this apple too. And this guy says, okay, here, it's $5 for you too. He gets it and he's happy. But now, let's say that this guy has 10 apples. Okay, so he has 10 apples. But now suddenly the line here is very big and you have 20 people here. So now, will these people get the apples? No, because there are only 10 apples and 20 people. So now all these new people here will actually start a bidding war. Some will say, okay, I need the apple very bad, so I will give you $6. And the owner of this apple will say, okay, perfect, I will take it. But maybe next guy will say, okay, I need apple very bad, so I will give $7. So what happens to the price? Price goes up. So demand is very high. We have many people here, but not enough apples. And because of that, price goes up. This is a very simplistic explanation, but it's very important to understand this. And we all know this. But somehow, when we enter a Forex market, we forget all about this. And we start forming certain strategies, draw trend lines, zones, and you say, okay, price now broke my trend line, I will buy or I will sell. You should know these things, but the price will not go up or down just because it broke your trend line. Be very aware of that. So any strategy that you see today, I don't know, like ICT, SMC, all these strategies, whatever you see and hear, keep in mind that this is only a tool, and no matter what strategy you use, it will not give you money, okay? It is not perfect strategy. This is only trading tool and knowledge that you should use, but that alone is not the reason why price goes up or down. This is the reason why price goes up or down. So now let's say what happens if price goes down. That means that this guy here, okay, he's happy and he has an apple and he wants to sell it for $10. He opened his store at 2 o'clock and now he's waiting for somebody to buy this apple. But nobody is here. There are no people here. Maybe they think that price is too high. Something is wrong, okay? So now what he has to do is to lower the price of this apple in order to attract customers. So now he's not very happy, okay? And he has to give a discount. For example, let's say that price is now $8. Nothing happens. Oh my God, what now? I need to give a more discount because I have, let's say, 5 apples, okay? And he cannot bring them home. He doesn't need it. He wants to sell these apples or at the end of the day, he will throw them. So he needs to get rid of these apples, but nobody's buying. And that's why he needs to give a discount. So let's say now price is $6 and there is a guy here and he says, okay, now I see that price was 10 and now it's 6. I think that is a good deal and now I will buy this apple. So price stays at the 6. There is another guy, he says, okay, 6, good price, he's happy. This guy starts to smile again. And let's say that now is 6 o'clock and he will close the store at 7 o'clock. And again, nobody is here. And he has 3 more apples. So he needs to give additional discount just to get rid of these apples. And finally he says, okay, price is now $3. I don't care. I just want to get rid of these apples. And suddenly there is a guy here. There is another guy. And they're like, okay, cool. I will buy it for $3. I think that is a good deal and I will take it. I actually don't need this apple as much, but $3 is a very good price. So I will take it. And then finally there is another guy and he says, okay, give me that last apple and perfect. Everybody is happy now. So what is the point? We all know this. This is how market works in general. That's why prices go up and down. And this is a crucial information to know because this is how you will determine which currency you want to buy and which currency you want to sell. Very good example of this was release date of a PlayStation 5. If you remember, that was a few years ago and I remember that the demand was very high. So let's say the starting price was $600, for example, and everybody wanted to buy it, especially at the holiday season around Christmas. So we had all these buyers here that wanted to buy PlayStation 5, but not enough units, and price went up very high. I will not go deep into this analogy because in this case there were bots and they bought all these PlayStation 5s, but anyway the demand was very high and I remember that price was around $2,000 and this is insane and some people still bought it. The demand was high, so the price went up, and that is very logical thing. This is how markets work. When holiday season ended, new units started to come in, so naturally price went down. and eventually it reached this level here, so now people are able to buy it at starting price. But at a certain point, price was very high because the demand was high. This also happens in a forex market. The only difference here is that the big boys move the price. Okay, big banks, hedge funds and all these things. So what we need to do is to determine which currency they want to buy and which currency they want to sell. So it doesn't matter which strategy you use. This is the reason why that strategy works or why that strategy failed. So for example, now let's say that Australian dollar is going down. You can check weekly time frame, you can check daily time frame, and you can see that Australian dollar is going down across the market. So across all the currency pairs, you will see that Australian dollar is going down. Also, you will check other pairs and you will notice that JPY is going up. It was very bullish week, month or year, whatever, but JPY is going up. So now I will ask you a question. Is it reasonable to buy or sell Aussie dollar JPY? In this case, where we know this information, is it reasonable to look to sell or to look to buy? And of course, the answer is very, very simple. It is reasonable to sell. Remember, this is going down and this is going up. So of course, when we choose this pair, we want to sell. So in this case, when you go to check your chart and you draw your trend lines and you draw your zones and you check this indicator or that indicator on this and IMC or whatever, and you decide to sell and it works, your trade hits take profit and you're very happy. I have my strategy and it works and I will become a millionaire, I will have a Lambo and all this stuff. And let's say you sold because price broke your trend line, whatever. And I want to tell you that that is not the reason why price went down. This here is the reason why price went down. It is good that you know about all these tools and you should use them and I use them, but that is not the reason why price went down. It's this here. And when you understand that, your trading career will become much, much better. Trust me on that. But now let's take the opposite example. You see very similar thing that you already saw on this pair, but now you take this trade on a different pair. For example, let's say you take it on a euro dollar. So it is the same thing, you sell, but it doesn't work. And now you're confused. It worked here, but it didn't work here. But what you didn't check is higher time frame and spotted if big boys want euro. And let's say that USD is weak. So naturally, price will go up. But you decided to sell because you saw something on a 5-minute time frame or 15-minute time frame, it doesn't really matter. You saw a similar thing that you saw here and you decided to sell, but this time it didn't work. Well, this is the reason why it didn't work. You need to do your homework. You need to check how certain currency is moving across all pairs and across all market and to find perfect opportunity to enter a trade that will follow what big boys want. If they want Australian dollar, you want to buy it too. If they don't want it, you don't want to buy it. And that is very important and crucial information that you need to know. Without that, you will never be a successful trader. As you can see here, I have a list of many pairs, and what I do is I check every single pair, and then based on that I can see how certain currency acts across the market. So I check all GBP pairs, and if I notice that price is going down for every pair here, it is clear to me that big boys don't want GBP. So I don't want it too, okay? So that is very important to understand. Or for example, I check all euro pairs, and if I notice that price is going up for every single pair, I know that big boys want to buy euro. So what do? I want to buy it too. Also, what is very important to understand before I review my previous trades is the way that price moves and the intensity of a move. So now let's say that price is going up, but it's going up like this. Or price is going up, but it's going up like this. So now when you look at this and look at this, price went from, let's say, 2 to 10. And also from 2 to 10 here. Let's say dollars, it doesn't matter. We can clearly see here that the intensity of this move is not as high as this one here. And this is also very important information. Here we can see that it took more time in order for price to reach $10 than here. Here it happened quickly and very fast, like this, boom. And this is something that you also need to understand, because it is not the same when you see a bullish move like this and bullish move like this. So now let's say that there is a major resistance level here. Where is more likely to see a reaction? Here or here? In my opinion, and not just my opinion, this is how it works, it is much likely to see it here, because we can already see that price is weakening. We can see that all these higher highs and higher lows are becoming smaller. And we can see that bulls are losing control, or better to say, all these buyers here are losing the interest for a certain product. They are not desperate to buy it. Where here they are desperate to buy it. They want this. But here, yeah, they want it, but not as much as here. And that is the difference between these two moves. That is also very important to understand. Now, when we know all this information, I can review my trades And hopefully you will understand it better and you will try to replicate this knowledge, and I'm certain that you will see results immediately. So first trade that I want to review is this Aussie yen trade, and the week before that I noticed that Australian dollar is going down. We can also see here this massive bearish move. So knowing that Aussie is going down and that JPY yen is going up, of course I wanted to enter a sell trade on Australian dollar Japanese yen pair. And if you look at the 1 hour time frame, we will see here a massive downtrend. So price started to go down and we can see that it formed this massive bearish move. Then here price started to consolidate, which means that buyers and sellers are happy with the price. Then suddenly this strong bearish move occurred, but immediately followed with this bullish move. This is what I call V pattern, and this pattern is very important, but I will talk about this pattern in another video. After that, again we can see massive bearish move. So at this point, is it reasonable to buy or sell? Well, of course it is reasonable to sell. So then we can see this bullish move, and pullbacks will often occur on a forex market because many of these sellers here, people that entered before, they want to exit a position and then price goes up, and we can see that it went up to test this level here. Then we can see minor bearish pressure, but then again bulls tried to push the price and tested this level again. This time we have much stronger bearish reaction, but price failed to break this level here. This is very important level now. And now what happens next? So we can see here this bullish move, but it is not very strong bullish move. Now look at this distance here. It is the same distance from here to here. But here it took only 3 candles and here it took 18 candles. Plus all this downtrend here and this level here. So when price tested this level and formed these bearish candlesticks, I knew that I want to enter a sell trade. Because this bullish move is not as strong as this bearish move here. The intensity of this move is not as strong as this move here. Here buyers are actually saying, okay, I will give you money for your product, but for a good price. And then we have this pullback. Okay, now I will give you my money again. But then again pullback happens. Okay, cool, it's a good price, I will buy it. But they are not desperate. They are not throwing their money for this product. And price is not going up like this, like this, like this. It is actually forming very slow higher highs and higher lows to get to the same place where it was here. And now at that point I scroll down on a 15-minute time frame, I noticed certain support zone, and once the price broke that zone I entered. And we can see that price continued to go down and easily hit my take profit level. I decided to put take profit level around this level here because I think that was important level, and then we can see that it was because price actually broke it and retested it here, and then price broke it again and retested it here. So in this case this resistance zone worked perfectly. And what I explained earlier is the reason why it worked. It is not because I just put my zone here, price tested my zone, and now I decided to sell and price went down. It went down because of my zone here. No, that's not why it went down. It went down because of the things that I explained earlier. Because nobody wants to buy Australian dollar, especially against Japanese yen. Another trade that I want to talk about is this CAD JPY trade. And also what we know that the JPY is going up, and I noticed that CAD is dropping. Here this is a weekly chart, and we can see this massive bearish move. Price retested a certain zone that I marked here and then formed this massive bearish move. And this is 2 weeks ago. So this week I said, okay, I will look to enter a sell trade if I see a good opportunity. So naturally we have downtrend here because CAD is dropping and yen is going up. And we can see all these lower highs, and then what happened, this strong bearish move. Then again we can see this V pattern, but this time it is actually an A pattern. So this is V pattern, and in the opposite direction we can actually say that it's an A pattern. Bullish move occurred, people started to exit all these positions, the news were announced, and then we can see this bearish move and then bullish move again. But now what is important to look is the intensity of these moves. Here market was very active and we can see these large candlesticks, and then we can notice that actually price formed this higher low. And if you look closely, we will see that the intensity of this move started to drop here. First we will see this massive bullish candlesticks, and then suddenly price slowed down. And then we can see this bearish pressure with a strong bearish candlestick, strong bearish wick rejection, and then again strong bearish candlestick. So it is clear to me that the intensity of this move is dropping. So the buyers are not willing to pay this price anymore. So the buyers are not desperate to buy anymore. This is a certain zone that I marked because I expected to see a bearish reaction to this zone. And that is exactly what happened. So if you look this bearish move and this bullish move, it is clear that this bearish move is very strong and that bullish move started to lose the momentum and that price actually formed a lower high. It tested my zone that I previously marked. It formed this bearish pressure. We know that the CAD is dropping and that yen is going up. We have a downtrend, and this here provided me with the information so I can actually confirm my entry. I decided to enter, and we can see that price formed this strong bearish move. Some bullish pressure occurred but nothing much, and then price continued to go down. This zone is actually a significant zone because we can see that price tested it here as a support, here as a resistance, support, support, and now again as a resistance. So traders, once you start looking at the market like this, every strategy that you use, it will immediately become better. So very important takeaway from this video is that you need to analyze every currency and see how this currency is performing all across the market. To find a pair, there is high probability that it will go up or down and that it's active, that it's not moving like this, because this means that buyers and sellers are happy. This basically means that this guy that is selling Apple is giving a certain price and these people that want to buy this Apple are happy with this price. So price is moving sideways, it is consolidating and nothing is happening here. So you don't want to trade that. You want to trade currencies that you see that nobody wants or that you see that everybody wants. You want to sell when you see a certain currency that is dropping and you want to buy a certain currency that you see that is going up. Now knowing this, you just find perfect currency pair, you wait for a good opportunity and then you enter. And another very important takeaway is the intensity of a certain moves. So this move here is much stronger than this move here. And you also want to consider this before you enter a trade. So traders, I gave you this information for free, of course, in this video. And if you have any questions, you can contact me directly via Telegram, or you can join my free Telegram channel where I share analysis basically every day. What I want you to do is to understand this, what I explained to you today, because this will change the way you trade. I hope this video helps you, and please consider liking and subscribing to my channel so I can continue to make more videos like this. Again, if you have any questions, feel free to ask me. Take care and see you in the next video. Bye bye.